All right, good morning everybody. This is John Locke from Locke in Your Success, and this is our Locke in Your Success weekly trade and market update for January 27th, 2014. And before we get going, I'd like to just mention that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event something is computer simulated, we do the best we possibly can to make sure it is as accurately represented as possible. And of course, as always, make sure you're aware of your risks, because the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this somewhere other than the website, come on over and visit, check out our programs, and join our mailing list so that you can sign up for the weekly webinar as well as get your free reports, the 7 Secrets to Becoming a Successful Trader. I do have some M21 news. We finally nailed down a date for when that's being recorded. That's going to be January 18th, 19th, and 20th in New York City. SMB, or jointly SMB and myself, we've decided to open this up to be a 3-day workshop, which is just going to be the afternoons of 3 days of the 18th, 19th, and 20th, and where you can purchase the workshop, come on in, and we'll have a nice live interactive demonstration there where I can get a lot of questions and I give tons of examples, and we can just kind of go at things. It'll be a really good time. So, if you're thinking of buying the program, it's an excellent opportunity, and you can get down to New York. This is an excellent opportunity to come down and do that. So I'm pretty excited about that. All right, let's take a look at what we got going on in the markets. The Russell, last week, if you remember, we were expecting the market to come down, and I was expecting the market to come down as long as the SPX didn't break higher. The SPX never did break its resistance point, and the Russell did push up a little higher than I expected, but we finally got at least the start of our pullback towards the end of last week. So the question is, where do we go from here? Initially, I was thinking the market was going to pull back from this level up here around 1164, come down, break under our trend channel, and probably close the month down in here. Because we went to 1180, or slightly higher than 1180, if you're looking at the pullbacks, right, most of them, if you come back here, is about 50 points, 50 to 60 points in general. We're down a good 40 points from about 40 points from our high. So it would be very likely that we're going to pull back another 10 points, come into our trend line. Where we go from there is going to be an indication of where the market's going. I still am expecting at this point that we go into a longer-term sideways range, although it might be a little bit higher than I thought. However, if we bounce this trend line, we'll have to watch, because it's possible this thing's just going to continue, because we never know for sure what things are going to do. But some of our longer-term indicators are telling us we're going to run sideways for a while. So we'll just have to sit and watch this. I would say, as far as today, it's not surprising to get a bounce off a 30-point down move or 40 points in 2 days. And a normal bounce would be 15 to 20 points. And if we stay in that range, I would consider that movement still bearish short term. If we bounce much more than 25, for example, I would consider that bullish, and we're probably not going any lower. So that's what I'm thinking of on the move for today. But certainly a 15-point move would be completely expected here to the upside. If we don't even get that far, I would consider that to be fairly a little bit on the bearish side. So, and we'll have to watch the days coming forward. But as of right now, we're kind of in an I don't know mode. We'll see where this bounce goes, and we got our expected pullback, so everything is looking fine. If we take a look at the SPX, you can see that was struggling and struggling, but never broke new highs. So most of my positioning on my live positions, I kept fairly negative delta, looking for this to come down. And like I said, I wasn't going to be convinced unless we get some sort of an up move. So here, this looks like we're still coming down a little bit further as well. I would expect the SPX to come down into the 1775 level before we get the market to turn around. If we come and take a look at the Nasdaq, we broke our short-term support level on Nasdaq Again, I would expect this to come down to the 3,500 level prior to pushing to new highs. And the Dow, this could support here. We are at a support level for the Dow. However, the more primary support is going to be down here at about around 15.7. So I would expect this to drop down to around 15.7 if everything else drops. That means going forward, we're expecting the market to come down a little bit more before having a bounce, and where that bounce goes is going to tell us where we're going in the future. And it's about time to run into a sideways mode. So that's what I'm thinking on that. As far as our positions go, I forgot to mention last week, and nobody actually brought this up, it was time to enter the V condor for March, and I did actually enter a position. I just forgot to mention it. So this was entered last Friday at around 10:30, and I'm not sure, remember why I put this on in the morning, but regardless, that's when it went on. So we come in here, and I'm actually a little, I should have gone to 10 delta. For some reason, I'm at the 880. I'm thinking maybe earlier in the day the market gapped down or something. But this should be positive 10 delta. We did the 880. 880 is fine. The other thing is, too, I may have had a choice at the time. It was done a little bit earlier in the day. I may have had a choice at the time where this delta here was maybe 9.5 and this one was 12 or something, and I went with the 9.5. So this is pretty much a standard entry. If we look at our call, our price is at 1171. I went ahead and did the 1160s straddle. And for the put side, yeah, this is 11.6. This is a little high, so I'm assuming the market came down a little bit from when we put this on. And we went short the 1080s and 30-point wings. And coming in, the position looked like this. Of course, we got a fairly substantial down move. This is the first time that we've had to do anything to this thing to the downside since, probably in over a year. So very bad timing on our part. And I knew this wasn't the best timing to come in because I thought the market was a little overextended. But no, not a big deal. We got this down move. I have a delta limit of positive 50 to the downside on a V condor. So I ended up coming in and buying back one of these 1180 puts to bring us down to 36. You can see here on the 24th, around 2 o'clock, I went ahead and bought this back. So currently this position is down a little bit of money. This is mainly a volatility issue. So the volatility lightens up today with the bounce. It should look pretty nice and possibly even be positive profit and loss. But for now, we are a little bit underwater, but everything is perfectly fine. Also, on Friday, we had a bearish butterfly entry day by guidelines. Now, in reality, I entered this a little bit earlier because, as you know, I was thinking that the market was going to come down, and I wanted to get in early enough to do that. And since I've been thinking the market's been wanting to come down for 2 weeks, this was actually entered almost 2 weeks ago at a little bit of a lower level. But here is our website guidelines position. Our guidelines tell us to enter on Friday. I entered on Friday. I did push the rules to enter in the morning because it looked like it was the start of the down move, so I went ahead and came in on this at around 10 o'clock, and I bought the 1140 butterflies, which at the time were about 20 points below the market, and with a pullback into the day, we ended up being up about $1,120. So this is what our position looks like now, and of course everything is looking fine. We'll have to see where the bounce goes. If we go back, that's it for March. If we take a look at the February trades, I did have a February ROCK trade on that was entered on Wednesday, which I knew at the time I entered it was a very poor entry point. But like I said, we're just doing everything by the guidelines, and we entered by dates. And the reason I'm thinking it's a bad entry point is because the market's so overextended, and we're expecting a 50-point down move. In that case, it's not the most ideal conditions to enter because we were expecting a fairly harsh down move. But if you went completely by the guidelines of the course, it did tell us to enter in a normal ROCK position. And let's just take a look at our entry here. I entered in at the 1160s, which was slightly lower than I should. I mean, technically, I was kind of borderline where I could have entered the 1170s. Being a little bit bearish, I thought that was a little tight, so I came down to the 1160s, and I added in 1200s. Position looked like this, which isn't positioned terribly for a down move. I left myself a little bit more risk than normal to the upside. Or actually, I didn't leave myself more risk than normal because I'm exactly at my minus 180 delta, which is pretty much what we're looking for, 20 points over. I just entered a little bit lower than I might normally have. And with the pullback on Friday, I did hit my delta numbers that I had to do a rollback. And I ended up taking the 1160s back to 1140. And now I'm in a half-entered rock position with one rollback, which is one of the configurations we haven't seen a lot this year because we haven't had the market go down very much. But this stands a little bit more volatility and price movement than a regular rock position. And with the bounce today, this is probably actually going to be up some money. So all we did is we ended up rolling the 1160s back to 1140. If we have to roll back again, we'll go back into an M3R, and we will be in a relatively good position for the picked up volatility. So here is the T-log if you want to take a look at that. This rollback was done very gradually. So as the market came down, I purchased the 5 of these 1140s. Then a little while later, I dumped some 1160s. Then I bought 5 more 1140s, and I dumped the rest of the 1160s. So this was kind of done throughout the day as the market's coming down. A little easier way to deal with it. Plus, if the market reverses at that point, it's not really that big a deal for me. So this is where we ended up for the week. As far as, let's see what else we have on here. We have the Februari Bearish Butterfly. Now, the Februari Bearish Butterfly, I did not make the roll to 1190. If you remember, I've been saying all week or the last 2 weeks, I'm waiting for the SPX to break out before I take too much of a risk of rolling up on top of the market because we thought the market was coming down. Now, I technically had a roll point at 1180, and we did hit that 1180 at one point. Now, one of the things is I'm not going to, no matter what my opinion is of the market, I'm not going to take the risk of drastically exceeding my maximum loss on a trade. And if the trade's completely out of whack and out of parameters, I'm going to go ahead and make my rolls. However, when we went to the 1180 level, and I technically hit my roll level, we only went to 181. We only had, our delta theta ratio was completely in line. We were less than 1.5 to 1, and my maximum delta was under minus 150. We're only $1 over our roll point. I'm extremely bearish on the market. It's not irresponsible at that point to hold it for a day, see what happens. So that's not really that far outside of the guidelines. That's what I decided to do there. And I decided to hold the 1170 position and hold off the roll for another day to see what happened. Had the market been up again on Thursday, then I would have been pushing my maximum delta limits. I would have made the roll. However, since that didn't happen, I didn't make the roll, and the position came down, and now we're up a decent amount of money. So I thought that was a very responsible and logical choice as to what was going on in the marketplace at that given time. Now from here, I am starting to pull close to expiration. So we are 28 days. We don't technically go into expiration guidelines till 21 days. However, I think it would be a good choice at this point to run into our expiration guidelines at this point and not let this go all the way to 1180 again before we make a roll. So right now I'm looking for maximum intraday delta of minus 500. I will let it exceed 250. Like if I was in full expiration rules, I wouldn't let it exceed 250 coming into the close. I'll let it exceed 250 coming into the close. We're kind of going into quasi-expiration rules where I'm going to limit my daily intraday delta as minus 500 and start doing our gradual rolls up to 1190 if the market takes off again. Otherwise, we'll kind of stay and just see how this goes. But everything's looking fine. Should be a decent month here. And I'm not going to let, like I said, I'm not going to let this completely run away from me at this point. And let's see, we have a M3 trade on for February. Now because I was in an M3 and my bearish butterfly, and I was letting my bearish butterfly kind of get a little bit out of whack to the upside, I didn't want all my trades to be that way in case the market did take off. So I did adjust up the M3 trade. So if we come back to, let's see, that would have been the 22nd, Wednesday, not wanting all my trades to be out of whack, this was our position as of last week. What I ended up doing is widening this position out, and which is one of the structures that we've been doing a lot, is just widening this out and correcting our delta. You can see I'm positive vega. I'm also very close to neutral theta. Now, a lot of times I'm not going to worry about letting it sit in this position for a day or two. It's not urgent. I don't have any major urgency to make an adjustment. If the market continued to take off, not that big of a problem. If the market sat, not that big of a problem. And it would have left me in a better position to handle the pullback. So normally if I'm in a position where I'm extremely opinionated for a pullback, I might just say, hey, I'm going to leave this for a couple days. But since I left my bearish butterfly alone, I don't necessarily want this taking a hit to the upside and that trade taking a hit to the upside. So that being the case, I went ahead and let's see, I put these, I decided to widen this out a little bit. So I took these off and rolled these to, I believe, to 1200. Let me just look at my notes here. Yeah, so I rolled that to 1200. And then I placed these at, let's see, 1170 and 1180. All right, so I did minus, I took 5 here and I put 5 here to come into this position here, and I didn't go positive 112 delta. Why am I? Well, let's just see where it went. I should have marked down, I should have made better notes here. So if we go a little bit further into the day, you can see I went up to 1200 with my longs, and I rolled out my 1180s, my shorts to 1180 and 1170. This brings me to a delta of about minus 70, which is still negative delta. However, it corrects my theta, it corrects my negative vega situation, and I end up in a situation like this. So that was the adjustment that I made. Of course, that was the wrong thing to do in hindsight, which is fine. And we ran down, and now we're down approximately $1,200. Mainly a volatility issue. When I widen out my position like this, I end up creating more negative vega, which makes me more sensitive to the down move, which is why we're down. Realistically, if we get a bounce and a volatility drop today, this will probably be at around break even and looking just fine. But that is our current M3 position. And last but not least is the February V Condor, which actually got some upside adjustments, or just a single upside adjustment on Wednesday, which was just buying back 2 of these 1220 calls. So back on Wednesday, when the market was up, I bought back 2 of these to get our delta down to, at the time it was minus about 115, 120. Brought it back down to about minus 80. And of course with the pullback, we're now a little bit positive delta, but this position here, it looks like this. And in reality is perfectly fine. So that's where we stand with that one. And that is all that I have for positions, and like I said, with the market. So if you want to type in some questions, you can. As far as the workshop goes, that's going on be on the 18th, the 19th, and the 20th. As far as the cost, it is not, they have not told me what they're going to charge yet. So I will keep you updated with that, and I'm sure you'll get some messages from SMB also as far as how long, what the cost is going to be. Okay, so if we didn't, first question, if we didn't enter the March Bearish Butterfly on Friday, what should we think about for late entry? So here's my thoughts on that. If you were looking strictly at a bearish butterfly and we're looking at our past market patterns, so our past market patterns are basically going to tell us that we're going to come down into this range of 1135, and we're going to have about probably 180 to 100 point bounce. So that's basically what we've been getting. That being the case, it's not the optimal entry for the bearish butterfly now. I entered back here when I thought the market was going, my live position, when I thought the market was going to pull back into this range. I thought that was a decent entry. I got pushed to the upside a little bit, entered 2/3, and this pullback's put me up a lot of money. So it ended up turning out really, really well. And from here, I can manage it forward and do pretty well. The website position where I don't enter till the guidelines date had me enter here. I entered at a higher enough level where I'm fairly comfortable with the reversal, especially since I don't think that we're going to get the 80-point bounce this time. So that being the case, I'm very happy with it. So if you're going to enter this today, depending on how high of a bounce we get to 1140, I'm sorry, 1155, 1160-ish. I don't necessarily think that's a terrible entry. It's not the best, but it's not terrible. And I'd probably be okay to go with that. If you can't get in at that level, I'd consider either doing something to limit your upside delta or possibly even doing maybe an M3 for now. So you can enter into an M3, and if the market stays down, you can still make a decent amount of money with that. If you do get the strong bounce, we can flip back over into a bearish butterfly later. So I would be very interested in a bearish butterfly at 1175, 1180. And if we do get that bounce, if you go into an M3 position, get that bounce, then switch back over. So doing something like that would be something like we think about in an M21 position trade when we're doing this market analysis stuff. And so anyway, that's my thoughts on the entry on a bearish butterfly. Thank you, Ray, for your comments. He's just saying outstanding session, explanation of your thoughts today were very helpful. Okay, great. If you ask me, okay, I'm sorry. The M21 program is going to be in February, if that's what you're asking about. So we're taping that in February 18th, 19th, and 20th. All right, so Rock, answer your question. With the large move down Friday, was this a good day to, all day, was this a good day to enter? Okay, is it a good day to enter the Rock trade on Friday? Yes, it's fine. The thing is, if you do your entry test, you're going to be pushed back into an M3. So you'd be essentially entering an M3 at the end of Friday, which I think is actually a really good position. Would I wait 30 minutes for the market? I mean, I might enter a little bit before that. I like to give myself a little bit more time. So yeah, 3:15 or so, I'd be looking at trying to calculate some sort of an entry. Let's see. Right, yeah, I was asked about M21 trade. Yeah, we'll look at the M21 position in a minute, David. Okay. For SMB, if the market goes way below my short strike on the lowest butterfly, or if I just had one butterfly. So I'm not sure what trade you're talking about. I think it's Chris, right? Let's see. All right, so we're talking about a bearish butterfly. If the market goes way below my short strike on the lowest butterfly, assuming I'm going to assume I just had one butterfly because that's what you have in parentheses. Would I close the position, reset the position, or how would I manage to do that? So bearish butterfly guidelines tell us that if we enter, let's see, let's just go to our bearish butterfly for March. Bearish butterfly guidelines basically tell us if we enter a bearish butterfly and we get to 1100, assuming if I entered in 1140, if I get to 1100, which is 40 points below my short strikes, that I'm going to take this position and roll it back to at the money, which is fine if you're downtrending. It's fine if you're sideways trending. If we're crazy uptrending like we are now, I would consider rolling back to, instead of rolling back to at the money 1100, I'd consider rolling back to, if you know the M3 program, right? So if you're just limited to the bearish butterfly and we're in an uptrending market and we pull back to 1100 and that's pretty much all the skills you have and you don't know anything else, I would consider just exiting the trade and moving on. Or maybe exiting the trade, waiting for a significant bounce and then coming back in. If you are someone who understands M3, then what you can do is you can take this, roll this back to 1080, run into an M3 position and try and pull another 10% out of it or more. If the market stays down, if the market really shoots up, then you probably end up, still making a profit for the month and doing okay, and you wouldn't take the drawdown. So that's what I would consider on how to manage the position going forward. And all right, so that's what we have so far for questions. I have a question on, I guess I briefly showed a position that I set for M21 last week. And if you remember, I was expecting the market to come down and then up, and the market went up and then down. So it's not acting the way that I expected it to act. So let me just come into here. All right, so here is that position. And in this trade here, we're going to use, when I set this up, I'm going to use a M3 Bearish Butterfly ROCK concepts to put this trade in. This looks a little different than either of those trades. And the reason is because I'm doing what we call an unhedged M3, which is something that we will be discussing going forward, the advantages and disadvantages. That is actually in a bonus section in one of the programs we talk about doing unhedged M3s. So this is within the program of an M3 trade. If we go to the beginning of the week, let's just go to Tuesday. I don't think I did anything on this on Tuesday. Let me just take a look at the T-log. Yeah, Tuesday we didn't do anything. So on Tuesday, coming into the week, this looked kind of like this, where the market's way up in here. The position managed to be at money. Like I said, I was expecting this to come down and then have to fight this to the downside and then go up. This actually went the other way. Now the market, my plan ahead of time for the market, should it continue to grind up like this, is to just try to widen this position out. So if we come to the end of Wednesday, I did make some upside movements here. But you'll also notice the upside movements actually increased my negative delta a little bit while extending the trade range up so that I can start raising this this position to the upside as the market continues to go forward. So this was our position Wednesday, and I did this by buying condors and rolling out my long strikes and rolling forward my short strikes. That way, if the market decides it just wants to sit up here or continue to grind slowly, then I can continue to widen myself out, bring this forward, and continue to make profits as the market grinds up. And of course, I'm leaving myself a significant amount of downside protection should the market come back. So that was the last position that I had on, last adjustment I made. Now, theoretically, if the market shoots back into here, I should be up $18,000 or $20,000. However, I know that if the market does it very quickly, like it did, we're going to have a significant volatility increase. I mean, the RVX went up like crazy in the Russell on Friday. That being the case, this got depressed significantly. So if we come to Friday, this is what the current position looks like on Friday. Let's see if we get this update. It shows me up about actually I think at the close of the day I was up $7,000. That was a fairly large position, so it's going to vary quite a bit. But the reality is, if the market volatility just comes back down to somewhat normal level, this will be up 20 or so thousand dollars. So this position is looking really, really nice. I have this particular position as a delta limit of positive 700, so I'm always near that. And this is what we look like here. As of open today, there were no further adjustments on that, by the way. So as of today, let's see what they're giving us for opening values here. I think we actually gap up a little bit, up about 320, and showing us up about $10,000. And if we get just a little bit of relief and volatility here, this will be easily up 25,000, 30,000. So that is what that position looks like there. I do have a plan going forward if it takes off and a plan coming down. But these trades here, the M21s are going to be, the plan for these are going to be different every month, and they're going to kind of revolve around what we think the market's doing from a series of techniques that are going to be shown in the program that are going to show you how to determine what the market's most likely to do, or more importantly, what's most likely not to do, and put us in an ability to make a decent amount of money here. So that is this. This is right now a $350,000 planned capital trade, and this month here, just the way the month went, if it went well, we'd probably be taking 30% off of that, which would have been really well, but the trade didn't go well. The trade went against what I thought it was going to do. So I'm kind of in the backup plan, and I'm going to try to take 35 to 50,000 out of this now. With the backup plan, that's probably very doable here. So we'll see how that goes. And that is all that I have for questions, and I think we're about out of time. And yeah, I think we're all set. So have a great week, everybody. And like I said, I expect the bounce today and possibly a little bit further down later in the week. And you know, so happy trading, everyone, and we'll talk to you next week. Thank you, and have a great day.